Welcome to the channel. Today I am looking at Teladoc Health Inc., ticker symbol Tdoc. They have just released earnings and I am going to be going through them today, then using discounted free cash flow models to give my fair value of the company in 2022. Is this stock a buy or a sell? So firstly, Teladoc is one of Cathie Wood's holdings in ARK-K. It's actually her second biggest position with almost over 11 million shares and a current market value of 716 million. I think that is going to take a bit of a dip right now. As you've seen, the market has reacted poorly to the earnings, down to $61.80 a share, and that is dropping slightly, 72 cents a share, down almost 5.5% on the day. But the more worrying outlook on Teladoc is it is down 74.49% on the year. It was an all-time high of 305 and is now at $65 a share. Is this the opportunity to buy the dip, or is this a stock to stay away from? So that's what we're going to be looking at today. Can you please give a like on the video? It really helps me out, and subscribe if you're not already, because there'll be plenty more of these videos coming with their earnings. So let's have a look at revenue. We firstly got the quarter ended in 20 and 21 to the left side, and on the right side we have the year ended. So what are we seeing? There's good news. Well, for the quarter, revenue was 383 million, and that has gone up to over $554 million. So revenue for the quarter is up, which is showing good growth. And on the year, it has doubled, well, almost doubled, 1.093 billion compared to 2.032 billion. So revenue has almost doubled, which is pretty bullish, if I do say so myself. But what does this mean in terms of net income, or on the sheet here, net loss? You can see for the quarter, it was a net loss in 2020 of minus 393 million. Almost a profitable quarter here, only, what's that, 10 million, 11 million in the red. So you can see here, this is actually pretty good. The expenses for the year down massively for the quarter, and almost a profitable quarter, which would have been very good for them to see, but unfortunately not. And if we look at the year, once again, still negative, but improving, and especially on double the revenue, minus 485 million in 2020, and that is up to minus 485 million there, 428 million on the year of 2021. So where are the cost differences here? Well, you can see total expenses were up, obviously, but relative to the revenue, that is a lot less. General and admin was down. Depreciation and amortization, deprecation American if you are, amortization is up a little bit. Acquisitions and integration and transformational cost was down. Technology and development was up. Sales up as well, and advertising and marketing up. So overall, 2.3 billion in total expenses, but double the revenue, which is excellent to see. Next, shares outstanding. You can see these have actually increased 90 million to 156 million. I do think that is a negative, but for these companies, I know this is quite a bit common. Obviously, you would like companies to be buying back their shares and using that, but if they're not profitable, they don't have the free cash flow, then, you know, issuing new shares to get capital and then raising the share price through investments is a very good alternative. So next we're going to look at the cash flow statement, and what we want to look at is the free cash flow, net cash from operating activities minus capital expenditures. So this is 2020, this is 21. The net cash flow, and this is used in operations previously, was 53.5 million. That has gone up and is positive to 139 million, almost 194 million. CapEx expenditures has doubled 4 million to 8.5, but I mean, when you've actually got positive net cash flow, that's not necessarily a bad thing. So it has almost doubled, which gives us a free cash flow of around about, I'm not going to do the maths in my head, but 182 million, I'm going to say. Give me a comment how far I was off on that. I'm not going to even second look at it. I'm going to continue. So that means that we can have a look at a free cash flow statement to see what that is. So let's go to my 185 million. Well, that was pretty close, but not a million miles away. So we're calculating the future free cash flows. The first, what we're going to do is kind of look and see if this is steadily increasing. This would be sort of flat in 2022 and steadily increasing again. What would that give us a share price? Well, that would be at $38 a share, which is a 41% overvalued at the minute. Let's just say they increase at a bit of a steady rate. They let's just play around with the numbers here. Let's go to 85% here. What would that give them? That is sort of reasonable growth, I would say. That's still a overvalued at $46 a share with a 28% discount, or sorry, minus 20% discount, which means it is overvalued. So yeah, discounted free cash flow is not really loving the stock. In terms of price to sales ratio, it is about a 4 or a 5, a little high for my liking, but these are companies that are meant to be growth companies. And if you bought the stock at, well, what, $300 a share back then, and they have been much better than earnings, they're beating earnings, then you probably like the stock at this point. I wouldn't buy the stock personally. It's not really the kind of thing I'm interested in. So let's have a look at some of the technicals here. Well, overall, these are going to be pretty bearish. We've got a 50-day, 100-day, and 200-day moving averages in red, yellow, and green, respectively. So what's happening? Well, the price is way below those major moving averages. We have death crosses here back in February. Could have got out at this point when the price dropped below those major moving averages. But then again, we had some in April. And right now, the 100-day is acting as a level of resistance. In fact, it's probably lower than that, the 50-day is. So massive, massive bearish signs on the 50-day, 100-day, moving 200-day moving averages. Next, what we're going to do is look at the MACD. What is the MACD telling us? I imagine a similar story as well. Yes, very bearish, but it was crossing to the positive. Has only just recently gone the other way. But the signal line and MACD line are way below the 0, which is bearish again. And if we look at RSI, well, I imagine what this is going to show again. On the dailies, not so much, trending towards overbought regions. But if we zoom out, let's have a look at the weekly. I do prefer the weekly for these kind of things. Well, the stock is at the most oversold it has ever been since its IPO back in 2015. So if you really like the stock, this is definitely the time to be purchasing because it's never been to these relative levels in terms of RSI before. So, right guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and I'll catch you guys next time.